It's Thursday again, which means it's time for another MacDesk Flow Report. I'm Rebecca Darst from the MacDesk. Today is April 26th, and we are looking at subdued upside action in the major indices today. Yesterday was a very buoyant day for the bulls, urged along by a very strong slate of earnings and Ben Bernanke's assurance that the Fed is ready to resume stimulus measures if the fragile economic recovery shows any signs of weakening. The market even seemed willing to shrug off a disappointing durable goods number against that larger bullish setup. So today's been an opportunity to take some profits off the table, maybe pair some positions, urged on by some less encouraging macro indicators. An index of Eurozone business and consumer confidence for the month of April came in worse than analysts had expected, this number having been released against the backdrop of an increasingly angry and contentious political debate in Europe over whether these punishing austerity programs across the continent are squelching any prospect of future growth. The drop in economic confidence in April effectively canceled out modest gains in the survey notched at the beginning of the year, which is also not great in terms of building any traction on the European economic recovery. What we did see in European trade during the pre-market was a boost in peripheral yields, Italian and Spanish yields moving higher, and yields on German and UK debt lower. This brings us to the U.S. Open, where traders have been parsing through a long list of earnings numbers. 170 companies reported ahead of the bell, another 130 are due to report after the bell, and these have been a very mixed bag. Some very strong numbers, others in line to a little short of consensus. But it was really the weekly jobless claims, which came in a little higher than the street was hoping to see last week. New claims came in at 388,000. The street was looking for 373. This is roughly flat on the prior week, but continuing claims rose slightly. As we've said in these reports, investors have been looking for signs of momentum, however slow going in the jobs picture. And this morning's numbers suggested that we may be flattening out a bit. In the meantime, we've since had a better than expected pending home sales number for March. That number soundly beat expectations, up 4% on the month. That's the highest number since April 2010 and was at the very highest end of what the street was expecting, with consensus looking more for a gain of half a percent to 1%. That's brought us to the highs of the morning. We're up about 50 points in the Dow right now. So major indices are trading modestly higher, but the VIX is also higher, up just over 1% and trading at the 17 level right now. This may indicate traders wanting to buy a little protection into tomorrow's Q1 GDP number. Bloomberg's survey of Wall Street analysts shows an expected growth number at 2.5% against a prior reading of 3%. That number's out tomorrow morning, definitely one to watch. For additional market insights, check your inbox at 1 p.m. for the midday. For now, that's it for me, Rebecca Darst, for the MacDesk Flow Report.